It seems like every time I make you guys a video regarding AMC and GME, it ends up being distributive bad news. In my previous video, I detailed AMC's final sequence in which we will make its all-time super macro distributive low, stair-stepping to that 50 cents target, while GameStop in inverse lockstep stair-steps to that 30-33 level by the month of April. I gave you guys a pretty strict update on Twitter regarding AMC's level change and what exact price targets we're expecting. If you are not following me on Twitter, you have to get on that. There are real-time updates that happen every single day. I am not able to make videos every single day. Just make sure you're on my Twitter and have post notifications turned on at all times. During AMC's recent shareholder meeting in December, they agreed to dilute in excess of 1.1 billion shares if need be to raise cash. And recently, AMC just put out an article saying they were going to dilute up to 150 million shares. Based off AMC's current share count of 515 million, it will not take more than an additional 300 to 350 million shares of dilution to get AMC's current price point down to that 50 cent per share target that we're expecting, in addition to any downswings that happen in the general market as well. So the purpose of this video today is to talk to the AMC shareholders. These are the people that have been holding or averaging down in their cost basis since AMC was $72 in June 2021 and have been sitting through super macro distribution and all the blip squeezes that we've had along the way, leading into the 8 preferred equity unit dividend, as well as the 1-for-10 reverse split. Key to remember on paper that 8 behaved in a way like a forward split of 2-to-1. AMC's share price at the time was $36, cut AMC in half to 18. That other $18 was derived 1-to-1 into the APE security, which led to AMC dropping 70% on its common stock from 18 after APE's inception. Additionally, you have the 1-for-10 reverse split, in which existing shareholders received 1 share for every 10 that they already owned, dynamically dividing their share count by 10, but multiplying the price of AMC common by 10 at the same time. And that is where we are currently trading. Where people get confused on Twitter regarding AMC's 1-for-10 multiplier is they see AMC currently trading at $1 on common and assume that it is actually 10 cents. But it's not. If you add in the APE conversion of 1-for-1 that was eventually moved back into AMC common stock, the reverse split math is not really 1-for-10. It's really more like 1-for-5. For example, if they were to forward split AMC 5-for-1, you receive 5 shares for every single one that you had outstanding. AMC's chart would move back to that price scale where that $72 top marked the June 2021 squeeze. And do not be nervous about another reverse split happening. That is not coming. A forward split is the only thing that is going to happen in AMC's future. Okay, now for the bad news. It is imperative that you guys remember how percentages work when we're talking about price declines and price gains on any security in the market. If a stock goes from $100 to $50, you cut that price in half by 50%. But in order to get back to $100 from $50, the price of that stock has to rise 100%. So effectively, you have to move twice as high on the upside to get back to the cost basis price that you were averaging in on the way down. AMC Common is currently down 99.6%. They're gunning for 99.8% if they get this down to that 50 cents target that we're expecting. And unfortunately for shareholders, that means that any markup sequence that we're to expect on the super macro is only going to get you back to a $2 or $3 level, even if it's a 400% run. This is a absolute killer blow for anybody that averaged in at strike prices like $15 or $10 on the way down, because you were never going to see those price targets again until the damage from the preferred equity unit and the reverse split becomes undone. I have said this on Twitter over 150 times now. The chart must change. AMC, after it finishes super macro distribution, needs to get bought or needs to merge with another company after they forward split and fix the chart in order to get your shares back to those higher levels in worth that you averaged in over the past 5 years. So one final time as the bearer of bad news, this just turned into a 3 to 5 year hold. AMC's next markup sequence is not going to take you anywhere above 3 or 350. And it is only after that, when you finish super macro distribution, that you can expect the company to make legitimate changes to its CEO, to its outstanding shares, and have a legitimate future by merging with another company that has the funds and revenue streams to get AMC out of the debt hole that it's been in since the COVID low. Listen, I hope that answers a lot of your questions, especially to the shareholders like myself that have been cost averaging in this entire way down. I hope that you guys have learned how to trade options along the way. You can always join the Yield Boss Discord if you want to do that to better your family and help maybe some of these debt payments that you guys are currently sitting in and being underwater on any stocks on top of AMC in the general market. I love you very much. I will always be here for you. You guys know where to find me. If you want to be a part of the Discord, DM me on Twitter or Instagram. If not, just continue to watch my videos and educate yourself on the general market. It's the best thing you can do at this moment in time for your family as the country continues to print money and issues debt at a spiraling pace. I really want you guys to be prepared for what's to come over the next 10 years, and I will always be here to educate you and prepare you in that sense. I'll talk to you soon. Any questions? Hit me in the comment section.